Hello, traders. Gary Wagner here. It is approximately 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, the 20th day of March 2012, and this is the daily report for gold and silver. We do have the precious metals complex under pressure, moderate to severe pressure this morning, as we have the complex trading lower. We are off about 0.75% in gold. Gold is currently trading down just below $13 per ounce. As you can see, 1650, 1649 current print. When we take a look at the marketplace itself in terms of the low that we saw, the low was 42 and the high was 65. We're off 75 cents in silver. As you can see, current print 32.11. And that has traded as low as 31.77 and as high as 33.04. Platinum down $28 and palladium down about 11. You know, it has been my assumption that we have completed the corrective wave 2, in the precious metals market, specifically gold and silver. And from the most recent activity, you would tend to think that that might not be true. But it does appear, even though we are trading lower, we're in at about 1658. We're neutral or flat in our silver. We have nothing in silver. But you can see that it is attempting to form a base. It has absolutely found support, in my opinion, down at the 1634 level. Those are the lows that we saw back last week. You can see those right in here. That's the good news, and this is what I said yesterday. The bad news is it hasn't been able to break to the upside. It's always been my contention that a market that cannot break out to the upside, if it can't make new highs, it's going to come and attempt to make new lows. In other words, it is constantly striving to increase its range. That's my opinion on a technical basis. We certainly don't have any kind of clear-cut bottom as we did in C here. As you can see, it's an absolutely clear-cut bottom or the kinds of clear-cut tops that we've gotten recently. Rather, what we're seeing is this base forming. I would have to say that as long as this market can consistently or continue to, have lows as it comes down and tests these lows that are above this series of lows, that this market is still forming a base and we still have an opportunity to see it go higher. Now, in terms of strategy, one of the things that I am looking at is if the market does make another play for the downside and it finds good support, we're probably going to look to dollar cost average that position. Now, on the negative side, in terms of looking at this being a potential bottom in gold, one has to look at the Heikin Ashi. Now, it is a lagging indicator, and as you know, I have been plotting this particular move from the top here as our A, our B, and our C. Now, we absolutely came off that C, and you can see we went green. Again, this is a 722 bars per day, but over the last day and a half, there can be no doubt in that it has kind of converted back towards a bearish mode. If we take a look at these Heikin candles in here, you can see this tremendous swing down. This is the lows that we saw last night right in here, and you can see over this last half a day period, and of course it's still going. This is still active right in here, this candle. But as you can see, the body size has gotten smaller. So what we want to do is to see if it can in fact form a base. If it does look for another play or a dip in the market, we might consider dollar cost averaging. If that's the case, I certainly will send out a trade alert specifically for that. Gold. Now, as far as silver goes, we're going to remain neutral. We never took a position in there. It turned green. We're looking at our daily chart. As you can see, it turned green, went back to red, turned green the other day, but we've got this big red candle. As you know, because of the Fibonacci retracement points that I look at, I needed to see a break above $33 per ounce. We didn't see it. We've been on the sideline on silver. That's probably a good case. But as I said, this market right now, in terms of straight resistance and support, has managed to form a base above this 50%. And this is what we talked about this weekend as well as yesterday. We still haven't breached into this territory. This territory is 31.83. You can see that we did have one low go into that. That's right in here, but then we had a series of higher lows right in here, but that all broke down yesterday. Of course, we'll have to see how this market wants to play out and then base our strategy from there. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.